This is Platform Diaries with Shane Williams, who chews the fat with entrepreneurs, startup founders and thought leaders on what it takes to traverse the wall between startup and scale-up.
Not since the dotcom boom and the GFC have we seen such significant headwinds affecting startups. But are there lessons from the past that could help us navigate and potentially even extract opportunity from these headwinds? My guest today is Alastair Blenkin, a lawyer come entrepreneur who's also an adjunct lecturer of both law and technology at the University of Queensland and CEO and founder of construction tech scale-up ProcurePro. We discuss the headwinds facing startups in the current climate, the challenges and opportunities that presents, and some of the lessons Alastair has taken from his first two startup journeys. I hope you enjoy the interview. So, Alastair, thanks for joining me on the show.
Thanks for having me, Shane.
Mate, so it's right now, end of July 2022, and there's some interesting macroeconomic situation going on with the war in the Ukraine and subsequent interest rates going up and inflation and whatnot. And we're starting to see reports in the media of things like businesses raising capital on like significantly lower valuations than what we've seen in the past. The AFR's reporting things like the funding is down 50% year on year. And so I guess where I'm going with this is it feels like we're kind of in a situation now where there's a whole bunch of new pressures that maybe hadn't been around for the last little while for startup and scale-up founders. And so I'd like to just sort of get your general views on what's going on in the macro sort of economic space that you're seeing. How's that sort of, what's your views on that? Maybe more closer to home with what you guys do in construction tech and what's happening in the construction industry. So mate, could you just talk me through what's going on for you?
Yeah, absolutely. I think certainly an interesting time. Our business ProcurePro, a subcontractor procurement platform for the construction industry. We were founded when COVID started, so there's never really been a time of peace. It's been interesting with lockdowns and supply chain disruptions. So that sort of level of disruption is almost a new normal. I think what we're seeing now, certainly in the construction space, is that with materials price increases, people's homes are more expensive to build because they can't get the materials out of other parts of the world. As you mentioned, the war in Russia has certainly increased fuel prices and the like. That's a real disruption to the industry, which our customers who we're working with and selling to are facing, and that creates some challenges in itself. It also creates what some people call zombie builders. So there are builders or subcontractors that have gone and priced jobs 12, 24 months before that are almost waiting to die. And most notably in Australia, ProBuild was a pretty high-profile collapse, but fortunately we've actually benefited from that. So one of our customers, Roberts Co, has taken over a large part of their projects down in Victoria, and which we're rolling out across on shortly. So there are all of these challenging factors in the economy, but there's also opportunity with that. And as a founder in the tech space, there certainly is some silver linings, given that technology is really seen as a large part of the answer. So certainly an interesting time in construction. The other side of the question there, Shane, was just generally, I suppose, macroeconomically, what's happening to funding markets. There's the public markets and then the trickle-down effect into private markets and in particular sort of VC-style funding. There's been a lot that's been written and said. We've been somewhat insulated from it, given that we don't have a need for funding at present, which is always a good place to be, albeit we're still pretty bullish about the opportunity to go and raise funds if you need to. So look, we certainly won't be raising money in the short term because there is inherent uncertainty, but I'm a big believer that certainly good companies will get funded. We're still seeing a lot of inbound interest from investors all around the world, and there's certainly opportunity ahead with a little bit more stability, ideally in the next 6 or so months.
So maybe I could ask you a sort of a probing, deeper question, if you don't mind, and that is, you're a founder, you're not necessarily wanting for funding at the moment, but when you're thinking about the type of platform or product you're building and the market you're operating in, I imagine you're thinking through strategy and going, do we go for our growth? Do we go different verticals, or do we go wider? Do we go deeper, and those sorts of things? And as a founder, do you think you have to kind of level up in some respects on really understanding your business model if you're going to face into potentially headwinds?
I think where we're at right now as a business, we're a couple of years old. We've built a product. We've got some repeatability in our sales motion, and we've got some predictability of revenue growth, which is really great. So as a result, we're not in this pure R&D stage. We don't necessarily have this urgent need for funding, and we've got a proven sellable product. So it's about staying focused around that. Maybe in a downturn, it's not the time to go and chase shiny objects, and to remain focused on what you're doing and doing it well. So we're fortunate that we've got, the timing wise, we've got through that R&D phase, and that we are able to grow our revenue at the moment. We're not profitable at the moment, but we are default alive. So if we kept our costs stationary and continued to grow at the current rate, we'd be profitable in 8 months' time. So with that level of comfort, we're still able to accelerate. So we're hiring 5 roles at the moment and continuing to grow, notwithstanding the uncertainty in the public markets. We're bullish about the opportunity that we have at hand.
And I guess that then is somewhat respective of the position you were in coming into this, well, let's call it downturn for lack of a better term, the maturity of your product and where you're at, the number of customers you've got. I imagine there's probably going to be other founders listening who may not be in such an enviable position. I wonder if you think about building a business despite the downturn, what do you think those sorts of founders need to be thinking about in terms of funding?
Yeah, well, I mean, look, if I cast my mind back 2 years to the start of COVID, we weren't in such a good position. We'd actually spent 2.5 years building and launching a product into the commercial real estate market that then suddenly anyone who owned shopping centres and office towers and got locked down, they didn't need business improvement software. So our business got the brakes put on it pretty quickly, and we ended up pivoting that into what's now become ProcurePro. So there's definitely a sort of a timing piece, but I think there's just the sort of the realism about it and being able to be decisive as well. So when we did get really shut down at the start of COVID, we were pretty decisive in how we acted, and we were fortunate enough to make a good decision that's turned into a really good opportunity that we're pursuing now. So that healthy dose of practicality and decisiveness.
I'm guessing you didn't start from scratch, right? You had a solid product, but market conditions determine you effectively chasing a different vertical, if you like. So I suppose, is there a lesson there in that, hey, you don't need to throw the baby out with the bathwater, but maybe there's another way to look at a different lens to apply to how to solve the same problem from a different perspective? Is that fair?
Yeah, look, absolutely. I mean, we had a product team together, a really strong founding team together that had 2.5 years on the court building product and learning some pretty hard lessons in enterprise sales and also unit economics. With hindsight, they were some really great lessons that has meant the second time around has come a lot easier, really. And to sort of comment on your statement before, Shane, around business model, one of the things that maybe we weren't as brutally honest as we needed to be the first time around was around just the pure economics of what we were trying to achieve. We were building a pretty niche product for a pretty niche market where if we hit, there was certainly a business there and a big opportunity. But if we missed certain customers when it's not a huge TAM generally, then it was going to be hard to make things stack up. So I think notwithstanding sort of the challenging macroeconomic conditions, you certainly learn a lot, and you learn a lot through adversity as well, just by putting effort in.
I mean, that probably leads me on to a deeper question around what are some of the things that learnings you took away. It seems like that's one of them. But if we're passing that forward to the next founder who's sitting there right now going, what lessons am I going to pick up from Alastair today? What do you reckon those are?
One of the things that I sort of, back when we're now in really scale up and operationalizing the business stage, back in startup phase, one of the sort of things that I would always sort of harp on about is focus. And there's a lot of things that don't matter, and there's a lot of noise and advice out there, but focusing on, what are we building for who, how much will they pay, and then how do we get them to actually to do it? That level of really focus around just build it and sell it and nothing else matters got us through that stage and sort of held us in pretty good state. But some of the learnings that maybe were a little bit more technical were sort of around business model, and they've come over time. So what we are in building a procurement platform for the construction industry, we're a vertical SaaS play, so vertical or software for a particular industry vertical. We're not horizontal, so we can sell to, say, every industry as long as they're a company with a HR department or an accounting department. And there are other business models out there. Like, are you a marketplace that connects buyers and sellers like an Amazon? Are you an advertising company that trades off the attention economy like a Facebook? Are you a services business where you can go out and sell your services from day one? And I think reflecting on what is your business model, what area are you playing in, and doing a bit of reading and research around that was learnings for me that came maybe a little bit later than it could have. Now, to apply that to a practical example in vertical software, when for us there's only 500 odd customers in Australia who we care about, that means our approach to the market is a direct sales approach. It's outbound, it's referral marketing, reputation, and having a really, really strong product is incredibly important. Whereas if you go look at a horizontal play, well, if you can sell to 10,000 customers around the country you're going into, or thousands or millions of customers around the world, then you can have other go-to-market mechanisms like running Facebook ads or email marketing automation. So it's a sort of a reflection of what type of business are you, and then what are the strategies that you apply to the type of business. And it's not just the sales and marketing motion, it's the customer success motion, it's the strategies to understand your total addressable market and to grow TAM and to win in a vertical that becomes really important and relates to your capital strategy as well. So that was probably one of the big learnings that I think could have happened earlier, but came at a slightly later stage for me.
That's fair enough. So if you don't mind me sort of pulling that thread just a little bit further, you, prior to the COVID and the reflection on maybe the viability of commercial property as a market, but let's assume it was prior to that and it looked promising. What do you think you missed, or the assumptions that you had about that market that were perhaps flawed? What makes you think it was a bad idea at the time, in retrospect?
It certainly wasn't a bad idea. We were building a contract management platform for the commercial real estate industry. We were pretty close to cracking it. We had some really big customers. We were solving a big problem that cost a lot of money that you could have built a high ticket offering around. But I think the way we developed the product was maybe a little bit too niche for the number of customers that we could have sold it to. There were some good learnings that came through that, and we built a product, it worked. We sold it to some customers and it made their lives better, and we made money off it. So we proved a lot of things out with that business. But I mean, if I had my time again, what I'd do differently is also just hire more people. So as Australians, where we can be pretty capital efficient, maybe less, massively gung-ho and, this is the biggest opportunity in the world, as say some of our American counterparts, and throw millions of dollars up against the wall. And that's, I think, to our detriment, right? So we were running off the smell of an oily rag. We had 3 engineers, a designer, and then me doing CEOing, salesing, and everything else. And I think one of the sound bites that I've learned from one of my investors and mentors who runs another construction tech platform is that his reflection on their business was they weren't well enough capitalized for the size of the opportunity. Yeah. And that would be the same reflection that I have, that given the opportunity that we were targeting, and you need a certain level of capability in the business, in the team size, and you need a capital strategy to back that up. So instead of running off a couple of $100,000 in seed capital and running off the smell of an oily rag, I think there would have been an opportunity to raise more money, to build more capability in the business, and to move faster as a result. And the outcome of that business might have been a little bit different, but it's all led to where we are today.
Yeah, true. And I think it's a bit of a what if, but that's an interesting one. So if you dive into that a bit, it's a case of more money means I can tackle this problem faster, somewhat relative to the size of the opportunity. Is there an easy, I know exactly when I should double down and ask for that more money and go, or is it kind of it feels right? Is there an obvious, as a founder who's listening to this, am I sitting there going, when I hit this number, that's when I double down on the investment and go after it hard, or is it just a kind of finger in the air? What do you reckon?
I think strategy really is a lot of intuition and a lot of conversations, right? So there's certainly no silver bullet, and there's still plenty of uncertainty around some of your decisions, right? So I think kind of some of the reflections that we had were we sort of had some golden goose customers and we were working with them. We were building a product and it was just build it and make it work. Then we had some key person shift in some of our key customers and that sort of fell over. We then started to learn some hard lessons in enterprise sales with some of my old kin lawyers being involved who are pretty conservative in nature. And that really slowed things down. And when we tried to solve the sales problems, we took focus away from the product, and that was a trade-off. And I think the reflection overall, and one of the things that I really sort of value as a founder is just the level, and our team does, is just having velocity. So that's probably the most important thing to us of whatever we're doing, do it fast. And that certainly doesn't mean to be reckless. We think about fast in optimizing for the long term. We're not making short-term sacrifices, but when we had that sort of not enough resources at our disposal to actually keep building a product, which we believed in and we had customers believing in, but also solve some of those other sales problems in the business, and then also going into customer success as well, that was where I think a little bit more backing, a bit more capital, but also some more strategic partners who can help us into some of those businesses could have been really helpful. Again, had I known what I know now.
Yeah, I mean, that's the beauty of hindsight. And I guess that's what this podcast is all about, right? Paying that forward. You got any other, I guess, for lack of a better term, tips, but things you would do differently if you had your time over?
Look, one of the... I'll not answer your question. I'll answer it with what is one of the things that I'd do again.
Okay.
And I think that not necessarily a lot of founders do, just around our capital strategy. So one of our investment techniques where we didn't go the venture path when we raised a $2.5 million seed round in September last year. We raised off a lot of high net worths. Those high net worths were pretty closely affiliated with the construction industry, whether they were executives of some of our customers, whether they were other construction tech founders or sort of entrepreneurs, or just construction figures generally. And that's been really effective to give people in the industry a real vested interest to help us succeed, whether that's through using our product, making introductions, helping us with marketing. It's been a really, really effective technique that I plan on doing again in expansion markets. And it's not as sexy in the headline in the Australian Financial Review as, hey, I went and raised off this amazing venture capital fund, but the practicality of it has been exceptional. It's changed our trajectory. So I think there's a real opportunity for that. And I've also seen other founders, chase meetings with VC funds when they just don't have the numbers for it, even though they think they're really special. They don't have that ability, and you can burn a lot of time on that when maybe you could group together, a bunch of $100,000 checks into a $1 million plus round with a degree of speed and ease and strategic assistance that might not be available through the professional investment circles. Yeah,
right. So that's an interesting one. You think about not just chasing down a VC for funding, but you're going after people who are, I guess, vested interest in the industry being successful and you being part of that and solving the problem. And I guess it all becomes insular and circular in some respects.
If you get some customers, and ideally that customers first, but it's sort of a pretty nice parallel as opposed to acting off ego or perceived norms of what you read in the media.
Yeah, no, that's a good point. It's a double-edged sword, isn't it? You'll end up with, I guess, investors who you may or may not be seeking for advice for scale and growth and whatnot. And part of that would be, hey, you're industry experts, you know the problems we need to solve, you know the people we need to talk to. That's really useful. I suppose the other angle to that would be, are you getting the breadth of, let's call it, the advice you would get from people who don't know the industry, who can apply a different lens to solving a problem that could be. So I suppose, have you encountered that? Has that been useful, not useful?
Oh, look, I think what we've got is a sort of a broad group of supporters, and you can call on different people at different times, right? So not all of our investors are completely construction focused, nor sort of all of the people that we take advice from investors in our company. So as you progress, I've certainly had the experience of having different people advise you at different times, and certainly you outgrow some of them, and you're looking, at that scale up stage for advice from people who have seen around corners and things come before you, which not general business people or general sort of experience and know-how necessarily have, right? So there is some of that scale-up experience that, we don't know what we don't know, and we don't know what's coming, and that'll be a new sort of ground to tread. But you have a myriad of advisors throughout the course of the journey and that help you along the way.
No, fair enough. So then you talked about number of, I guess, ideal clients in this market, and I can only assume that the sky's the limit in terms of geographic global markets and so on and so forth. What I'm thinking about is what's next for ProcurePro.
Yeah, look, absolutely. So we're between seed and Series A, you'd call it. We're monetizing. We've got a really good product. It's proven. It's delivering results. Customers tell us it saves 30 to 50% of their time compared to what they were doing previously with a whole lot of Excel spreadsheets, Word docs, emails, and maybe slightly adjacent software.
Yeah.
We got to keep building a product, but also building operational scalability in our business. So we've now got departments, which is really cool. So we're approaching 20 staff. We've got a couple of people in each department. So whether that's sales, CS, we're building out marketing at the moment, ops and finance. I've now got another person helping me, which is great. Yeah. So building that level of capability and really the muscles within the business that's going to enable us to scale, at that Series A juncture is what we're focusing on right now. And really then what's out ahead is that continued scale. So we're leading up to a Series A, which we'll probably get to in the next 6 to 12 months. That'll be likely sort of a 10 mil plus style funding round. And a big strategic focus there is expansion, which we've looking at UK as our next expansion market. So we've already begun pre-sales and working to understand what's the regionalization that's required to service that market really well. And we've got a couple of early customers that we've started working with. So selling into that market, getting customers on board, working out the product tweaks and getting that UK narrative and that market working as part of the narrative that the Series A will fund is really what's ahead for us in the next 12 to 24 months.
Man, it sounds like an exciting time coming up. I'm going to be looking forward to keeping in touch and seeing how you're tracking. Appreciate your time. Thanks for being on the show, and we'll talk again soon.
Thanks for having me, Shane.
You've been listening to Platform Diaries with Shane Williams. To find out about how Shane enables digital businesses to scale, please visit shanewilliams.com.au. Thank you for listening.